All right, well, hello, active traders, and welcome to our Trading Week Ahead broadcast here for today, Saturday, April 29th, 2023. It's a thrill to have so many of you here. Just returned from a 4-day stint in Las Vegas, speaking for Money Show at the Traders Expo, and I had a great time. Thanks to all of you who attended the Money Show. It's great to see traders in real life and be able to shake everyone's hands and sign the programs and do the selfies and most of all, hopefully give people some actionable ideas that make sense. So anyway, great to see all of you here today. Let's go ahead and get started. So what's the story of the market? Mostly it was a lot of uncertainty until Tuesday, right? Tuesday and Wednesday, we had big selling pressure. Thursday and Friday, we had big bullish rally. Before that, we had a lot of chop. And it's all in context of being right under resistance, right near the 4,200, just a few handles up from where we're currently at. Now would be a especially stupid time to be looking to, or maybe an unwise, it's a smart time to be looking to see what's worth trading. It's a bad time to pull the trigger on trades until we hold above the 4,200 for at least 2, if not 3 days. So and again, this is the right side of a bullish cup right under resistance, right? It's knocking its head up against the ceiling here. So any professional trader will tell you that you want to break the 90-day before you go long, especially in a recent rally after a lot of selling pressure and a lot of indecisiveness. We have dojis here, uncertainty. So the market's telling you a lot of uncertainty and a lot of selling. Oh, and by the way, a couple of big days that are green. That's not a consistent story. That's an inconsistent story from a price action trader standpoint. So we want to be cautious as we test the resistance. Now, if we break above and hold above it, then we're clear. If we stay over the 4,200 for at least a couple of days, then great. But right now is the time to be carefully looking for which charts are the best ones. Get ready, yes. You might want to put on some small pilot trades for swing trades. But right now, this next upcoming week, better time for intraday trades than for swing trading. And for example, we had some really good charts covered. I guess the two best ones yesterday were, let's see, where we're at here. Two best ones yesterday were top, TOP. What a chart. Went from 50 to 250, so a ×5 runner. Now you wouldn't never want to swing trade this, but for day trading, I provided lots of good setups and high risk though. I like this chart better, the HUDI chart. This guy ran away from 4 to 14. Okay, ran up all day long. So those type of charts are really good for intraday trading. As we're looking for swing trades, though, let's take a look at some of the charts. So we mentioned that the S&P is near resistance, and so because of that, we want to be a little cautious until it breaks above that and holds above it for a while. Our VIX is still way down here near 16. Remember, I had said we don't want to go inversely. We don't want to trade inverses or short the market until or unless the VIX gets above 20. So we're still in bullish territory. And like I told you last week, I mentioned if we get under and stay under 17, that's a good support level for a bullish thesis. So we're now at a new 90-day low as of yesterday on the VIX. So that means we have a pretty bullish setup. And so we want to be carefully looking for long plays, but only once we break that critical resistance area up at the 4,200 in the S&P. Any street trader, any floor trader, any prop trader, any discretionary professional trader will tell you the same thing. Wait till we break resistance. But get ready. Now is a good time to get ready. So let's go ahead and take a look at some charts. We've got lots of them. And I will, and again, if you have any tickers you'd like me to pull up, that's what that whole bottom list is, ones that folks here today, really big turnout, I had posted. So I will pull those up. Let's see. Hey, Eli Lilly's good, but well, yeah, one of the techniques that I mentioned that I've mentioned to you folks too is when you're looking at swing trades, look at the ratio of green to red candles lately. Now this one is mostly red, despite the fact that it's in an uptrend. So I don't like it. It means every day that it went up, it ended down. Even though price action, it gapped up, it rolled over into the close. That's not That's a bearish overhang. This has lots of red despite price action going up. It's kind of a rare pattern. You don't see that often. What you want to see is a lot of green and preferably large green, right? So these are all decent up charts. These are carryovers from last week. I like the DraftKings large candle, and I like the recent strength in this LEGN. Notice, please, my other strategy, one of many strategies, never buy nines, right? So for example, here you can see it bumped its head against 70 even, 6 times. Never did break the 70. Buying something with a 9 in it's usually a bad idea for exactly that reason, because often they roll back down. Now, if it gets over 70, then we're good to go. ACLX moved up, kind of bearish engulfing up near the high there. So obviously, you'd not want to go long until it breaks the 45. This one's pretty good, VKTX. The only thing I don't like, though, is the ratio of green to red candles is more red than green lately. What I want you to think about is just simply look at the last 10 candles. You want to have at least 7 out of 10 green, okay? So, or 3 out of 5. Okay, now let's take a look at charts of your folks' choice. These are ones that folks here had mentioned earlier, and oh wow, a bunch of new ones too. Let me add those before we take a look at this, so I don't. They're scrolling by. So many people here. Thank you for your. And I'll tell you if the chart looks good. And again, it's not trading recommendations or advice. It's just for educational use only. LTH. Yes. Excellent. Thanks, folks, for what I'm typing in are the tickers that you folks are typing in, and it's great to see so many of you here. It's a really big turnout. Anyway, let's take a look at charts and see which ones are worthwhile and or not, based on the criteria set that I like to develop for you. Do be sure to get the Swing Trading Success downloadable video course if you have not got that already. Anyway, CBay, it's a slow grind up. I kind of say show me the money because there's not enough range in it. I'm going to go a lot faster through these charts. So this one's kind of on the fence about. I like the trend up. I like the fact that probably 7 out of 10 candles are green. So it's an okay chart. There's better ones out there because the range is not great. Remember, your exit target. This is a quick tip. This is a rider downer. I don't know where my Mont Blanc is, but anyway. Your exit target, it should be 50% of the 90-day range. Half, right? It's like, you're not going to get the whole thing likely. You'll get about up to half, right? And so the range on this, excuse me, it's only 7 to 11. So it's only a $4 range. So you only have $2 profit potential before it's likely to shake you out. So yeah, it's okay, but I think there's better charts out there. That's a better chart. Okay, so CBay, you're fired. TJTX, oh, that one's good because it's got a nice 45-degree angle, which is great. It's got a good sequence of increasing range green candles in the upper right. Again, this is one of my favorite patterns where you have a small followed by a large green candle and an uptrend. Often that'll accelerate on up. And this does almost meet that 2-to-1 criteria, right? 14, 28 would be perfect, but 25 close enough. That's a good chart. So that one meets criteria. That one's a go. So thanks to the trader who mentioned that one, TJTX. How about KBH? I'll endeavor to go a little quicker here. That is one thing though that I got some feedback that sometimes I speak a little fast, so I try not to do that. KBH, yeah, sure. I'd play with that. It's got a reasonably strong trend, lots of green. It's large candles in the upper right, lots of buying lately. Yeah, that one will play. How about Oracle? No, not enough range. Bill. Why would anyone trade this? When things go flat, that's when you don't trade. When things go down, that's when you don't buy. When things go up, that's when you buy. Or if it's gone down really sharply and starting to bounce, but slow grind down like this, Hey, no. TMHC. Okay, that's a winner. That's a good chart. I like that chart. It makes sense. The ratio of green to red, the last 10 candles or so. Again, it's nothing magic about 10. We want a representative sample of data. As a former statistician for the Ford Motor Company, I've got a lot of background in process capability and manufacturing, quality engineering. You apply that to the stock market and you're looking for variation. You're looking for increasing ranges. You're looking for rock star charts that go up with good volume and volatility. Notice, please, the volume is going up here. So we've got a nice uptick over here. Got a nice, what I call an acceleration ramp is a pattern. We've got a steady uptrend, then kind of hockey sticks up to a nice 45-degree angle breakout. And that's really good. So that's a good. I'd hit that. That's a good chart. TMHC. BITI. Nope. EFA. Nope. Not consistent enough. Range isn't big enough. That's a horrible chart. OKTA. That'd be okay to short, maybe down at lows. Delta Airlines. That's an especially terrible chart. It was fine for day trading yesterday. In fact, it was one of our picks yesterday for day trading, but not for swing trading. General Motors. Could we pick a more terrible chart? STNE. Okay, that one, a B plus. That one will play. It's good. I like the uptick. I like the fact that it's got a large green candle and it's above resistance on the 90-day. It's a cut pattern that's broken out, and it's got a lot of relative strength the last couple of weeks. Mostly green. It's the story of people wanting to accumulate it. So yes, that one will play. STNE. Speaking of playing, one thing that you want to do is not play around with your trade, and you want to learn, the difference between a more professional approach and one that's not. I'm the guy, I've been the go-to guy for over 2 decades for tens of thousands of traders. If you do want to join my live room, I've got a special at just $9.97. That's only $86 a month, which is super cheap, especially for the quality and the percentage of win alerts that we post, that we squawk out in the room each day. It'd be great if you guys want to join. Quite a few have joined this past week, so thanks to all of you who have recently joined. And for those of you who are about to join, you have my word. I like to work really hard for people, answer all your questions, give great alerts, and we have a good time together. And really smart traders in the room too, who contribute quite a bit. So if you want to be part of our community, we don't upsell multi-thousand-dollar courses or any of that kind of foolishness, or sell software scanner add-ons or any of that kind of BS that inflates the cost. This is it. There's nothing else to buy needed. So for just $9.97, you get to work with me 5 days a week. It's 5 days a week. Every single trading day, from the morning at 8:30 Eastern until around 11, at 10:30 up to 11, and then in the afternoon, you're fired. How about oil, USO? That's a terrible chart. See, people, you don't want to trade, how to say, that's a rock star chart. That's good. Yay, ISEE. So you want to trade things that other people are interested in purchasing. Think of it like the movie Aladdin, and you're in the bazaar. You're down there in the trenches, in the booths and everything. You want to buy low and sell high. You want to sell at a profit. Now that's hard to do if you buy something that's going down. You usually end up selling at a loss. Or if you buy something that's going sideways, you end up selling maybe a break even if you're lucky, but usually a loss. If you buy something that's going up, often it'll keep going up. Amazing. Much like Newton's third law of physics, where a body in motion will stay in motion until acted on by an outside force, like sellers. Buy, buy, buy. When something's in a tight channel that's a 45-degree angle breakout, like the 45-degree angle breakout like this, it's often a great candidate for a good trade because it's got a good history that people feel comfortable with. It's like, hiring an employee, and you do a reference check, and you find out that, yes, they're a high producer, they take a lot of responsibility on, you don't have to babysit them, they know how to take leadership, and you wish you could hire them back kind of thing. That's the kind of stock equivalent you want to trade, not the person who's absent, has excuses all the time, right? Anyway, the point is, charts like this are great. So that's a good one. See, Ken, what do we do after the volatility market in? Sam stock one day. You trade small, like my colleague Salznoff says, trade small, trade often. That's exactly right. But like my colleague Harry Boxer, brilliant guy Harry Boxer, also says, well, we think like this. Harry's brilliant. You scale in, scale out, right? You always break your trades in 2 or 3 pieces. You don't do all or nothing trades because sometimes you'll take a stop and the other half stays alive and then puts you net in the money. Or you may take a stop, another half take even a larger stop, or you take a win and a larger win. The main thing is give yourself multiple shots at making money. And the way to do that is to scale, or as my colleague, the late Van Tharp would say, position size, right? Be sure to read Trading Beyond the Matrix by Van, he's great. Be sure to read Profitable Day in Swing Trading by my colleague, Harry Boxer, and Beyond Candlesticks by Steve Nissen. 3 of my favorite, and The Stock Trader by Tony Oz, my 4 favorite books. All right, anyway, ISEE. That's a great chart, right? TTD. Not enough range, not a tight enough channel, and too choppy. I would likely not make much money with that. I'd likely get stopped out. I might make 80 cents or $1, not worth $60 a share. Always ask yourself, how much money could I likely make with this chart or not? This one's a little wild, but I like it. It's got good range. It's got really strong volatility, a good directional story of more buyers than sellers. That one's good. That'll play. LTH, the ticker. So you guys are doing pretty good overall. You might want to short this under 86 or so. That's a bad chart. AXON. Oh, that's terrible. I think we already covered this one, right? No, that's also a terrible chart. So we narrowed the list down to a handful of good ones. Hey, so how are you doing, man? Let's see, GE. No, I do not short. I buy inverses on down days. But let's recap. I just 5 seconds on each of these so you can see which charts we liked out of that list. And you guys had some really good charts, so thanks. These are good teamwork, right? Some intelligent, good charts. And hopefully, you know, over time, those of you who posted really terrible charts learn the difference. You know, test these charts out and see which of these make money. Those are all good charts, right? The story is consistent buying. Pinterest is terrible. Not that one. That's a horrible chart. This one's good, ISE and LTH. So that's our short list that we like. That one's, it's probably the least of them, but they're all good. They're all good, sustainable charts. You also have to be able to read the environment. For example, I crushed it at Hold'em at the Horseshoe. Went in with just a 1, they spread a 1-3 and they spread a 2-3. I was at the 1-3 and crushed it. I just bought in 250 and I walked out with like 620, I think. Anyway, know how to play, right? To flip your chips, know how to read the table, be able to beat the marginal hands, know who the locals are. You can always spot the locals because they usually have, you know, more chips than the table buy-in. Yeah, that's kind of like the tell. They can play because they beat the max buy-in for the table. I think it's like 1 to 3 or something. And they got 500-600 worth of chips. They're probably really good players, so you don't want to play against them unless you got the nuts. But the environment makes a big difference, right? So our market is in a volatile environment, and just how soon they forget. Remember, the market has sold off quite a bit earlier this week. It's only Thursday, Friday we got up days, right? Previous to that, market was down. So don't forget that markets go down as well as up, and vice versa. That's one reason why I really don't like watching financial television, because it's a bunch of hooey, and a lot of times they'll get people all pumped up to, hey, the market's rallying, blah, blah, blah. And the next thing you know, oh, well, it's overbought. Yeah, that's why it went down. And so don't listen to people who talk on TV for the most part. The only 2 people I like is the chart master guy, and I forgot the other fellow's name. Anyway, let's take a look at these charts. I digress. Okay, that's a good chart. ROL, that's perfect. That's wonderful. I like it. That'll play. The Qs suck. Too slow chop up. GE's okay, but the range isn't justifying a $100 price. We have a bearish engulfing up at the 100. Notice, please, this is very much in sync with what I teach about. You don't buy nines, right? Because often at the 9 or the decade value, you get a rollover, right? And that's why a big bearish engulfing. That's what this big red candle wrapped around the previous candle here is. Learn candles from Steve Nissen exclusively at candlecharts.com. Anyway, bearish engulfing, because they work. So you don't buy up there, right? That'd be a bad play. So just know the GE. And if it breaks the 102, 103 later. Let's see, RSG. It's a good trend, but the range isn't good enough. It's not, the range is only 120 to 140. So it's only got $20 a range for $140 instrument. So although it's good for an uptrending instrument, the payoff ratio, the leverage is not what we'd want. So for that reason, we take a pass. See, all that good. We overall have some really good charts here. This is how you boil down the list as you scan through. And again, this is what we do for our members in our live room is, people ask about charts and we'll pull them up together. Mostly it's day trading during the 9:30 to 10:30 or whatnot, but we also do swing trades as well. And so you might want to join at the current special trademastery.com/expo. TNE, TMHC looks really good. KBH looks great. TJTX. Yeah, those are all winning charts, right? They have been winning charts and look like they may do well moving forward. Now let's narrow down our other list then. That one had too much chop lately. This one I think is too expensive. Yeah. This one, pull back and chop. UL. These are all from you folks from earlier. Most of them, I think. Drafting, just okay. LNGN, a little pricey, choppy. ACLX, it's got a story of recent buying, so it's good. The VKTX is good. Okay, so that's our updated swing list of picks for the week ahead. And that's how you professionally scan through and figure out what's worth trading, right? Any questions? Let me know. Let's see. Amazon, hey, Judy. No, not enough range. Remember, if you're paying up, $100 a share, it better have like at least 40 or 50 points of range to it to make it worth that much money per share. Right? Because, for example, pull up one of these other ones. This guy, you're paying 25 for a share, but it was 14, so it's got a $10 range. It's got almost as much range as Amazon for a fourth the price, and a really better trend even. So, oh, thanks, John. I appreciate it, man. What's the criteria for swing? Well, there's a lot of them. Well, for example, volume, we want at least 1 million shares a day. Price, we want somewhere, usually, I like things that are between 10 and 40 or $50 a share, like this. I like things in the teens, like 10, 15, 20, 25, 30. So 10 to 30 a share, roughly. You can see most of these are maybe slightly above that because we've had a nice run up in the markets lately. They should be in a continuous uptrend for at least the last couple of weeks. A continuous or relatively continuous uptrend. And that's just simply because that's the story of institutional traders with lots of money, more money than we have. The guys that are swinging billions of dollars in and out of the markets, they're voting with their pocketbooks as things continue to go up. So I want to say incremental 45-degree angle breakout runs, not straight up, not flat, but somewhere in the middle there, and reasonably strong range. and volume. We do not buy things with nines in them. We don't buy pullbacks. We don't buy drops and hope they'll bounce. We like to play uptrends. Hey, Ray, thanks. See, TJTX. Let's see, how would I manage to trade in that? Well, thanks, Ray, saying good session. Thanks, John, saying I'm up there with one of my heroes. Thanks. TJTX. Where would I enter scale? Where to set stop? Okay, Jim. Again, not trading recommendations, but how I would hit it. I'm a big fan of waiting until something gets above the nearest whole number that it's currently chopping around in. So I would wait till, say, 26.2 for the entry. To scale in, I like to scale in if something ends the day above the previous day's high. And I will scale out of the trade if it ends the day beneath the previous day's low. So that's one thing for scaling. I generally use every $2 or so for this type of instrument. So my specific trading plan, and test this out and let me know just how much paper trading money one could have made with this. I've purchased at 26.20, 28.20, and 30.20. I put my initial stop loss at 25. So I buy 262. You can tell a good trader by how tight their stops are. Not too tight, but definitely not loose and all over the place. I buy 26.20 with a hard stop at 25, made just below, say 24.9. So 262 entry, 249 would be the stop, and I'd buy every $2 up on to scale in. And as it moves up in your favor and you scale in, as it keeps going up, trail a stop at least above break even, so that you're playing with the house's money, right? And so you have a carefully developed, very price action based strategy that's well identified. And so I use a $2 trail stop as it runs. But yeah, good questions, folks. Good stuff. Well, I think that's gonna be about it. Do I watch tails? You have to identify what you mean by tails. I've just got back from Vegas and I'll keep it rated G. But anyway, good run up in these charts, and probably means I watch the tails of the candlestick charts. Yeah, absolutely. One thing you want to look at when you look at the tails up and down, you do count the tails to be more professional and specific. Yes, you do count the tail because that's part of the algorithmic high frequency trading. It is a valid data point. So yes, we do count the tails, but I count the whole real body, the story of the stock using the range as measured by the whole real body has much more weight than the tails do. So that's a good question, an intelligent question. So for example, the tails in this particular candle are not particularly significant to me. What's more important is the height of the whole real body range of that candle. That means more, so that's good. So let's answer the question, John. Can you run an intermediate seller? What will the Fed do with that rates? I don't think they'll back off until late fall at the earliest. Hey, thanks, Judith. It's a good session. Thanks. Yeah. I've been calling Tesla short since 8/14, 2 years ago. Yeah, sub 150. Again, not a trade recommendation, but I would short 149. I wouldn't short it here, of course, because it's bouncing. But if it rolls under the 150, again, I like using those large increments that people will pay attention to, like 200, 100, 150. If it gets down to 149 and drops, that would be a short continuation in Tesla. Absolutely. There's a couple of like lower price, like TSLS and or ETFs that track this, and you don't have to spend that much on the instrument to short it as well. All right, folks. Well, I'm going to wrap up for now. Thanks so much for being here and sharing part of your Saturday with me. I hope that you have a profitable and a fun week ahead, and I look forward to working with y'all. And again, if you want to work with me for a whole year, it's only $9.97. I guarantee there's no upsells. There's no, oh, and by the way, you can buy my XYZ course for $2,000, my scanner for $100 a month. None of that BS. You get all my training and my best for just $9.97 for a whole year, which is $86 a month, which is hopefully a great value, right? I think it is. Hundreds agree, so I appreciate that. Thank you for being here. Have a fantastic week, and be safe out there. Remember, the number one point is because our S&P because this punk is getting up near resistance, we don't want to go long right under resistance. And the reason is that's an exit target for people who've been long from earlier, right? We're exiting up into resistance. So you're going to see at any slight sign of trouble, it'll roll back down like it did last week, Tuesday, Wednesday, right? So wait until we stay above the 4,200, just a few handles up there. We want to stay above the 4,200 mark for at least 2 or 3 days in a row, and then we can start scaling into some of these positions as they run. But be careful. Next week would be primarily for small size swing trading or aggressive day trading is fine. So aggro on the day trading, but conservative, gonna get off the freeway and go into the suburbs and slow down, put the foot on the brake. Don't do too much swing trading just yet because we're right under resistance. And whatever you do, do not buy right because it just goes above resistance, because often that's a false breakout and roll back down. That's why I say we want to hold above that 4,200 mark in the S&P for at least 2 days or more before we start putting on some size in our swing. So let's go get them. Let's make lots of money. Let's not suck. Let's try and do well for ourselves and our families and our loved ones, and hopefully you guys do well in your trades as well. So hey, thanks, Dennis. Hey, thanks, Marilyn. Hey, thanks, Errol. Hey, thanks, Scott, John, Gary, Daphne. Hey, have a great, I like that name, Daphne. That's a great name. Have a great weekend. Thanks. You folks too. I'll see you next time. Bye for now. Stay safe out there. Let's make it work. And take care. Trade well. Bye for now.